Well, on this Monday, it's a brand new trade week, a brand new trade month, and a brand new quarter for the trade. And the grains, at least for the soybeans and the corn, are headed higher with kind of a rally going on here today. Let's go straight to the corn board. That's where we find December corn right now is on the higher side by 9 cents at $3.65 and a quarter. We've been as high as $3.66, and we are well off of the low of $3.56 and a half. So kind of a big range here, one of the bigger ranges we've seen in the corn market for quite some time. You go out to July, it's the same story, up 8 3/4, trading at $3.90, only 3/4 cent away from the high of that contract. Soybeans, they are double-digit higher, with November up 16 at $8.61 and a half. We've been as high as $8.64. January up 15 and a half at $8.75, and July up 14 and a half cents as well. December Chicago wheat down 1 and a half, 507 and a half, but the new crop July is up 3/4 at 541 and a half, and December Kansas City wheat is down 3/4 at 509 and a half. The July is up a half at 549 and a half. December Minneapolis wheat up 2 and a half, 575. The July is up 2 3/4. It's at 605. The December cotton contract is also higher by 48 points at 76.85. And at the edge of the trading floor in Chicago at the CME Group, Scott Gecas, Longleaf Trading, is here with us. Scott, if you would please describe kind of the mood there at the trade today now that we've got this agreement.
Yeah, it's pretty much just a relief, just a big sigh of relief seeing that NAFTA deal came through. Soybeans are being pushed a little bit higher on this NAFTA deal. Canada doesn't really import too many U.S. soybeans. U.S. soybeans is still trading at a very large discount to Brazilian soybeans. So we're going to see how this is really going to play out. But in the short term, it's just a knee-jerk reaction. The NAFTA deal is just helping pressure or putting pressure to the upside with the soybean market. But after that bearish report from Friday, ending stocks at 438. Early estimates going into October ending stocks is roughly 963. Those are all-time highs. So if we get positive news out of China, I mean, we're still going to remain bearish on soybeans in general.
What about the world supply and demand estimates that are coming up here now that we've rolled the calendar into October? Is the trade talking about that yet, or is it still too soon?
They were talking about it on Friday. So, if these ending stocks reached at 963, some estimates are as high as 700, or 1,000. But we're going to really see how that plays out. I mean, this is very detrimental right now to the U.S. soybean market. If we can't get those exports out, we're going to be sitting on those soybeans for quite some time, and it's going to have a huge effect on soybean prices just across the board.
Wheat not enjoying the same day that the soybeans and the corn are.
Yeah, with the wheat market, I mean, the story has been this way all summer. It's a strong U.S. dollar putting pressures on U.S. wheat. At the end of last week, U.S. wheat was starting to look more attractive to the outside world versus Russian wheat, Ukrainian wheat. It's just not at that level seen with the stronger U.S. dollar, and that's why you're seeing this little pullback.
All right, Scott, hang on with us. We need to take a quick break, and when we come back, it'll be the livestock's turn. That's coming up next here on the Market Day Report. On Friday, there was quite a bit of enthusiasm over in the protein complex. Well, it's carried over into today as well, particularly now that we've got this agreement with Canada involved now. Over to the live cattle market. And right now we see here where October is steady and unchanged at 113.45. December's down a dime at 118.75. But February live cattle are up 17 at 122.97. October feeder cattle are down a dime at 158.08, but November up 43 at 158.48. January up 67 at 155.32, right in the middle of the trading range. And I want to point out that these deferred contracts here in these futures are all on the higher side here in the cattle market. And all of the futures, all of the front 5 contracts in the hogs are on the higher side. October is up $1.77 at 63.95. December is $1.80 higher, trying to close that gap between the October and the December. 59.72. By the way, that contract, that December contract, has got probably more, a little more activity than even the October at this point. February up $1.75 at 67.60, only a dime off of the high here. Scott Gecas is at the edge of the trading floor. Scott, there during the break while we were waiting here to come back and visit. Sounds like quite a bit of activity there as well. Still pretty good activity over in the livestock trade also.
Yeah, and the livestock trade, it's an odd dynamic. I mean, your fourth quarter production are going to be at record levels, so there's a huge supply concern. Just waiting to see if this market can actually absorb that extra supply. Demand has been strong, though, moving forward. That's why you're seeing the cattle prices be at these levels. But overall, with that fourth quarter jump in production, we really have to see how this market's really going to absorb it. You know, cattle market is definitely being brought up by the hog market with the NAFTA deal. Canada doesn't really import too much beef from the U.S., but on the other side with the pork market, I mean, with China, Mexico, as well as Canada, they're the three major importers of pork. So now we got the two deals done with Mexico and Canada. So now we're just waiting on the stuff with China to come out and play out. You know, with the hog market in particular, though, you know, that African swine flu is definitely spreading. Now there's reports of it in Russia, Europe, as well as now you have another concern of there's been a reported case of bird flu in China. So that's, I mean, it's rampant across the board. The hog market is definitely being held up with the hopes that you're going to have much stronger than expected exports in the next coming year.
What is your opinion then, I guess is the question, is the hog market basically going to hold the protein complex together?
It looks that way. Right now, the only thing that we're concerned about is if these exports don't show up like expected, then you're going to see a huge collapse. It's only being held up right now by the hopes that these exports are actually going to materialize.
All right, Scott, thank you very much. Scott Gecas, Longleaf Trading, there at the edge of the trading floor in Chicago. And let's check and find out what's going on with the milk prices here today, especially now that we've got that agreement in place. It did include some language about milk prices. And we've got the October up 15 cents at $15.95, and November, Christina, is up 11 at $16.42. In fact, we've been as high in that October contract as just $15.98 on the knocking door there of 16.